Good morning, good afternoon, good evening for some of you. Welcome to our session on young women's financial inclusion, what works. Thank you all for joining. It's a pleasure to see many of you. And I'll take you straight to Tanzania. We'll start with a welcome in Morogoro, where Tessa, a young woman, had a dream to become a nurse. And she was studying. Unfortunately, because of the death of her mother, she actually had to leave school after grade 7, and she started working in a hotel to earn a living. Then she got pregnant and had to stop that job, and also her partner left her. So she had to come round and started a little business. Luckily, her mother actually had passed on some of her entrepreneurial skills and experiences to her. And so Tessa started running a small restaurant. That's where she is now. She would like to access some financing to expand her business, but she actually finds it challenging to get a loan. Terms are rigid, expensive. But she's joined an informal savings and loans group to provide her with the necessary financing and flexibility to manage her finances. What she would dream of is actually to save up a larger amount of money to then buy a plot of land or a house where she can be with her family. Unfortunately, those kind of resources she can't save with the savings and loans group. So she's still looking for financial mechanisms that can support her. So you realize that she's not even 25, but already she's a striving entrepreneur with the welfare of the next generation on her shoulders. Now, exactly helping women, young women like her, reach the goals that they have is not only important, but it's also pivotal for development. And financial services, we believe, are an essential component of that. And that's why CGAP is working on young women's financial inclusion. My name is Antonie Koning. I'm a senior financial sector specialist at CGAP, and I'm focusing on women's economic empowerment through financial services. I already mentioned that young women's outcomes are important, and I'll just give you one figure. Strategically, it's important to make sure that young women get through education. A 1% increase in young women completing their secondary education actually has an economic advantage of boosting economic growth by 0.3% per capita. But there are obviously many other reasons why young women should be helped. Unfortunately, they are among the most socially and financially excluded of all the potential financial service users that we see. And research has shown that access to appropriate financial tools and knowledge at the age that we're looking at between 15 and 24 can not only help enhance savings, enhance young women's income and financial management practices, but it also can really contribute to improving other outcomes. Such as the educational outcome I just referred to, but also health and psychosocial functioning. Yet, as you can see on this graph to the left of this slide, it's precisely at the age between 15 and 24 that a gender gap starts to emerge when we look at financial inclusion. Young women and young men start to become more included at the same rate, but around the age of adulthood, we see that gap emerge, and it's not really closing at any point in time. So we believe that addressing young women's financial inclusion, particularly during adolescence, is critical for closing the gender gap and supporting young women to fully participate in economic life of their communities. So we are asking ourselves the question, how can financial inclusion initiatives be designed and delivered better to include young women at that critical age? At CGAP, we've done two things, if we go to the next slide, Rani, to support that. First of all, we took stock of the evidence that exists around financial inclusion of young women and the benefits. And you see that publication on the left, and also the publication on the right is the publication that we're talking to today, Young Women Financial Inclusion and What Works. And it is really relating to a decade of work by financial institutions, NGOs and donors And we took stock of all that experience that was already out there in terms of what are the strategies and the opportunities to meet the financial needs of young women. So today we have an opportunity to discuss this with all of you. And we are going to do that in 3 parts. The first part will be very much focusing on why do we need to focus on young women? And we'll do that with a fireside chat between Sophie Sirten and Esther Dassanou. The second part will be focusing exactly on what works and what we have seen, and my colleague Rani Deshpande from CGAP will be presenting our learning. And the third part will be on the how practitioners are actually delivering solutions to young women. And we have 2 fantastic providers of services with us that I'll introduce to you later today. But with that, I will hand over to the fireside chat. We will start with Sophie Sirten, who's the CEO of CGAP, and she will be interviewing Esther Dassanou, who's the Director of Gender Programs at the MasterCard Foundation. And Esther works there to accelerate access to dignified and fulfilling jobs for young women in Africa in particular. I invite you to look at the event page for more details on the impressive careers of those 2 power women, but I will now hand over to Sophie.
Thank you very much, Anthony, for the nice introduction, and welcome, Esther. It's a real pleasure to be discussing with you. So Anthony told us the story of Tessa and how important financial inclusion was for her. At the MasterCard Foundation, you have put squarely at the center of the strategy, especially their employment and their access to finance. Tell us why.
Thank you very much, Sophie. Can you hear me? Great, excellent. So I didn't quite get the whole question, but I believe what you were asking me was at the MasterCard Foundation, we've made a commitment to focus on young women out of our overall target of youth in work. And enabling them into work for us means that what we're seeing is that most of the work, or at least the opportunities to create work for young women, happens through entrepreneurship a lot of times. And who says entrepreneurship says, of course, access to finance. Now, the majority of the young women on the continent we're finding are, or if you will, a large portion of the young women on the continent are actually in rural and peri-urban areas. So in alignment with our charitable purpose wishes to alleviate poverty for the most disadvantaged, we find that not only young women are the most disadvantaged, but they're even further disadvantaged in rural peri-urban areas and in, if you will, low-income zones in urban areas. So the foundation is taking, therefore, a very deliberate and intentional approach to focus on accelerating work enablement for young women in those areas through entrepreneurship development, workforce development, and in both instances, we see access to finance being part and parcel of that process. Now, in terms of, what we're seeing and why it's so important that, to your point, Tessa's story and the opportunity to accelerate financial inclusion is so important to the growth of these young women, is that if we're looking towards the future, these young women are the economic agents of change for our continent. Our continent is not developed without them. Now, their ability to access finance will significantly impact their ability to grow their businesses. But in order for them to be able to access the financing, we need to ensure that we're understanding their environment. I think Antonique in her opening remarks said that, you know, most of them tend to not be educated, which means that their ability to read, to understand, to decipher what all the documents that are required to open an account, get a loan, et cetera, is not going to work for them. And so coming up with alternative ways to integrate them in the system, taking into account their realities, is very critical. I think the other bit that we're finding out is that, you know, even the relationship with financing is very different. And we've seen it across the board through some of our programs. The trust factor, the trust element is there. Right. And so I remember one of our young women participants saying to us when we asked her, very similar to Tessa, except she didn't have a restaurant. She literally had a side business where she was selling vegetables. When we said, look, wouldn't you want to take a loan so that you can buy more merchandise and sell it? And she said, if I was to take a loan, it would be like bringing a curse onto my life and onto my family. So for us, it was very real in terms of the lack of trust when it comes to the formal financial system as we know it. But then when we asked her, where would you get your money from? She mentioned her VSLAs. So she had more trust in the VSLA system and in that indigenous, if you will, financing mechanism than she did in the formal system, which means to us that I think addressing financial inclusion and accelerating financial inclusion for young women requires going or taking a step approach, right? It's first and foremost about increasing their understanding, making them comfortable within their own space with savings and lending, but coming up with a model where the savings and lending have now the opportunity to become or to enter the informal system. And as they enter the informal system, to ensure that we're not losing the young women. Because what we've also found is that once it becomes formalized, those for whom the system was created get left behind. So that's, if you will, what the foundation is focusing on. We've done a lot of work in like Ethiopia and in Uganda, Tanzania, actually, with partners such as BRAC, and with another partner called Kafia in Ethiopia. And what we see working across the board is that when you first build on confidence building, first and foremost, right? When you first build on agency as well, it enhances not only the participation, but also the likelihood for these young women to be able to access loans, to utilize the funding for that which they're asking the loans for. And that was also something that was very interesting for young women. The process, if you will, of utilizing loans is also in stages. So stage number one are the challenges at home, in the family. It's about the education. It's about the health. It's about the nutrition. It's about the social challenges that they face on a day-to-day basis. So when you're looking at the things for which they ask for a loan within their VSLAs, it's usually that first. And then the second stage, then it becomes about, you know, growing the business and taking it to the next level and so on and so forth. So I think these are also very important nuances as we look to address the needs of this particular segment, especially on the continent.
Thank you very much, Esther. I hope you hear me better now.
Yes, much better.
Great. So given all these obstacles that you discussed, including the need to build trust, to use informal or more formal systems that young women trust and are comfortable using, the need to build confidence, the need to understand what's happening in a family, et cetera, What lessons do you have to share with all of us who are trying to make a difference for young women? How can we reach progress at scale?
Thanks, Sophie. I think that's really important. In terms of reaching scale, I think the first thing is we can't do it in silos, right? Most of the financial institutions that are so keen to do things for this particular segment find themselves very, very challenged in the sense that regulation very often is, I'm sorry to say it, but almost an impediment, right? A barrier to them being able to go this low, if you will, down the population segment. So the first thing is, how can we first, of course, put the information and the opportunity from a continent perspective, because for us, for example, enabling young women in work by 2030 could actually add around $287 billion to Africa's GDP. That's not small, right? So if we're banking on this potential opportunity, then the next question is, what does it require at public sector level, at private sector level, and even at civil society level, to be honest, in order for us to tap into this opportunity and enable these young women to thrive and enable this opportunity to become reality, right? So the role of government and our ability to work with regulators to understand the market and come up with the right types of regulations is critical. So I would say that's the first thing. The second thing is, because of the size of the loans that they're going to get, because of the size of amount of savings that these young women are going to have, we cannot expect to use the brick and mortar type of financial systems. And so it provides a huge opportunity for digital financing, for fintechs to also come in and play a, if you will, a bigger role, I would say, that they have played so far. We're seeing, you know, emergences of these types of players, but we need to accelerate them. And we need to accelerate them in a way that still, again, fits the realities of these young women. Because they're not educated, language is going to be a factor. Their ability to read is going to be a factor. So it's one thing to put the great AI and everything else, but then you have subtitles and so on. It's not going to work, right? So we really have to kind of really come up with innovative ways to include them, but also innovative ways to accelerate them. One more point I will say is that in our research, what we found is that, you know, the entrepreneurs that are the most well taken care of are those that are in cities. You have incubators, you have accelerators, that's where the focus is. But then a young woman like Tessa, who's in her village in Tanzania, who wants to take her restaurant to the next level, who's holding her hand to take her to that next level? We find that incubators and accelerators are to some degree behaving like financial institutions and don't want to go into the rural areas. But if we're going to take young women in Africa to the next level, we need to also, I think, encourage, incentivize incubators and accelerators to review their models to fit better to the realities of these young women and to meet them where they are.
Thank you very much, Esther. I think we've abused our time, but maybe you're basically calling for a true partnership vision where the public sector puts in the regulatory environment. I would add connectivity and even access to energy. You really need these young women to be able to participate economically and digitally in an active life. And then you're really calling for digital delivery and innovation, which I could not agree more. So thank you very much, Esther. And let me pass back the mic to Antonique.
Thank you so much, Sophie and Esther. That was a very insightful reflection on why we actually should be focusing on young women. And you've already moved us to some extent to the what works and what needs to be done as well. So that's wonderful. Thank you so much. So we're moving from that why to the what, and we're orienting us to the lessons learned and that were reflected in the recent publication that CGAP released. And I'll hand over to my colleague Rani Deshpande, who co-leads the research on young women's financial inclusion with me at CGAP, to share more from that publication. Rani, over to you.
Thank you so much, Antonique, and please let me know if my audio is not coming through clearly. So, as Antonique just mentioned, we have now heard a little bit about the why. Why should we focus on financially including young women? Which begs the next question of how to do it. Well, luckily, the sector has some 2 decades of experience on this. And to further innovation, because all innovation is grounded in a thorough knowledge of what has and hasn't worked in the past, we decided to try and take stock of that knowledge as a preparation for further experimentation. Luckily for us, the field had a great deal of knowledge about this from different perspectives, from FSPs and NGOs. Unluckily for us, this knowledge was scattered across dozens and dozens of documents, and a good portion of it, that operational wisdom or magic, was buried within the staff of expert practitioner organizations. So we undertook to try and collect as much of that as we could. We conducted an extensive review of published and unpublished documents by practitioner organizations, complemented that with over 30 interviews with expert practitioners to really get at that, the stuff that couldn't be put down on paper. And then the resulting draft was reviewed by over 40 industry players that we reached out to through FinEquity. And the result is what you see here. It is, or it aims to be at least, a one-stop resource for practitioners looking to impact the lives of young women with financial inclusion. And we'll drop the link into the chat for easy reference, and it will also be linked on the presentation that you'll get after the webinar. So what did we find after all this research? Well, the first thing we found was that how depends critically on who, because young women are not homogenous. In fact, the period between 15 and 24 is one of rapid transitions along several life stage dimensions. These matter because they critically influence a young woman's financial habits, goals, and possibilities, which in turn determine the right financial inclusion strategy for her. The dimension that people tend to focus on first is age, and with good reason. It's indeed important because it determines legal access to different types of formal financial services. But age isn't the only dimension that matters. School work status, for example, is another key factor, as it determines a young woman's sources of money and financial goals, and also often where she can be reached. Family position also varies a lot across young women, as many go from being under the care of someone else, and usually single, to having primary caregiving responsibilities during this age and possibly being partnered. This matters for financial inclusion because it determines a young woman's gatekeepers as well as her financial responsibilities. Contextual factors, including social norms, rurality, and socioeconomic status, also have an important impact on when and how a young woman makes these transitions and how those life stages translate into financial characteristics. So, for example, in deep rural or poor contexts, even legal majors can lack access to financial services infrastructure, while in wealthier contexts, a legal major may still be in school and economically dependent on her family. There is, of course, a certain degree of fluidity between the poles of these life stage dimensions. So a young woman may be working for pay or not while she's still in school. But this is why segmenting along just one dimension, usually age, can be misleading, and why good formative research is so critical to find out exactly which combination of life stage dimensions and contextual factors applies to your target segment. But in general, the poles of these life stage dimensions do line up as shown. So for example, most young women under the age of majority are in school, and there are very few who are married and still pursuing an education. And the combinations of life stage dimensions that cluster on the left side of the diagram give rise to a very different set of financial characteristics than those on the right. So minors or students or children in the family generally have less access to and control over sources of money, more dependence on others, less complex financial needs, and less access to financial services infrastructure. while those on the right side tend to be more the opposite. They have more access to and control over resources, less dependence on others, more complex financial needs, and more access to infrastructure. These different sets of financial characteristics each require distinct financial inclusion approaches. Now, for convenience, we've labeled the two ends of this spectrum as dependent and independent, but I want to stress that these are not segments in and of themselves. Rather, they're groups of segments which may have one or more of these characteristics. So, for example, a particular segment of young women on the dependent side might be either young or students or economically dependent, but it doesn't have to be all three to sort of qualify. They will still be especially appropriate for financial inclusion approaches that we'll label dependent segment approaches, which we'll see in a minute. And often, of course, a particular segment will combine elements of both poles and require a combination approach. So let's now take a look at the different approaches practitioners have used to serve these diverse segments. There were 5 key components that the literature and interviews pointed to as being particularly important for young women. First, the types of products to offer: savings, credit, payment, insurance. Tools that allow young women to store small amounts of value are really the foundational product here, certainly for dependent segments, but also for independent segments. Not only do they build up assets and increase resilience to shocks and reduce exposure to other kinds of risks, but also because young women, as Esther was alluding to a minute ago, often prefer savings for the buildup of initial business capital. Now, age limitations on owning your own account can often make informal options such as savings groups a better choice for those in the dependent segments. But independent segments can often access a fuller range of products offered through the formal system and have more use cases for them as their financial needs become more complex. The second element to consider is product delivery. How will young women access the financial tools and products you're offering? This is a function of age, but also of resources and cost. Digital delivery in particular becomes more viable as young women age. But even for independent segments, a human element is important to retain in sales and service. Another way to control costs is through groups, which aggregate demand and consolidate transactions. These are particularly good for young women who cannot access individual financial services due to age or physical distance. The third element that came up as important in financial inclusion strategies for young women is financial capability building, or what type of information must be provided along with the products to enable young women to make optimal use of them. This is not only influenced by age or sort of cognitive development, but also by the roles a young woman plays. Those towards the younger end of the spectrum may have more recently been in school and so be more primed to learn in a classroom type situation. They may also not yet have taken on multiple roles in the household and so have more time for extensive financial education. On the other hand, those who are already caregiving or working for pay, it's important to remember that their time is at a premium. Financial capability building efforts therefore need to be concise, practical, and focus on the critical minimum of information young women need to make good financial decisions. The fourth element is social intermediation, which involves decisions about the other supports or services needed to enable financial services to have maximum impact. These may be related to other technical domains like health or livelihoods, or to building social capital. It depends a lot on what other constraints a young woman is facing to economic empowerment, as well as her role in the family. So, for example, does a young woman need livelihoods, skills in order to save or borrow, or is her income earning potential being put at risk by the possibility of unplanned pregnancy? In that case, can the FSP or another entity like an NGO or a government agency provide job or business training or training on sexual and reproductive health and links to services? Alternatively, because of restrictions on her mobility or access to information, a young woman may also need assistance in simply accessing sources of financial services or even information about them. In this case, practitioners may need to liaise with the gatekeepers who mediate her access to that information to enable her to join a savings group or be allowed to open a bank account. So you see that whatever the domain, social intermediation can not only directly impact young women's financial and non-financial outcomes, but also make her a more empowered user of those financial services. And finally, last but not least, the fifth element that must be considered is commercial viability. How self-sustaining can this strategy be? As you probably guessed, the cost of the complementary services needed to ensure the impact of financial services gets greater towards the left side of the spectrum. So the question arises, To what extent can the private sector be brought in to provide financial services so that subsidy can be directed to those services that won't be provided by the market? Here's where partnerships come in, especially for the more dependent segments. And there are several success strategies that we talk about more in the paper, including specific points to consider when evaluating the compatibility of financial service and non-financial service partners. As young women move toward the independent side, they begin to become more attractive as clients for commercial financial institutions. But even here, profitability won't be immediate. The FSP has to take a long-term or life cycle view of young women's value as clients and make sure she stays with them through a ladder of age and stage appropriate products and services. But if they do that, there's evidence that young women, as they age, can become particularly loyal, low-risk customers. And that's what we're going to hear about more right now, as I turn it back over to Antonique to introduce our next two guests.
Thanks so much, Rani, to go through a lot of the lessons learned over the last couple of years, focusing on young women's financial inclusion. And indeed, I have the pleasure now to introduce two power women again who are in this field working to serve young women. And I'll start on the right-hand side of the screen here, introducing Mercedes Canalda, who's the executive president of Banco de Ahorro y Crédito in the Dominican Republic. That's a microfinance institution that's part of the BBVA Foundation. And I'll also be joined here by Diana Lugutua, who is the Senior Program Officer at CAMFED in Ghana. And CAMFED is an international NGO that catalyzes the power of the most vulnerable girls and young women to create the future that they see for themselves, for their communities, and for Africa. So I'm very happy to have both of you with us. And Mercedes, maybe you can also turn on your video, but I'll start with you, Diana. I think we've heard from Esther and Sophie at the beginning about why it is so important to focus on young women. And your organization in particular has a focus on the more vulnerable part of that population. So maybe what you could get us started with is describe a little bit the type of young women that you most commonly work with. And Rani, of course, just made the point that it is very important that we segment the young women to make sure that we adapt our strategies to the relevant target audience. So maybe you can tell us a little bit more about the women that you work with and what their financial management needs are.
Okay, very well. Thank you. Can you hear me clearly?
Yes, I can. Thanks.
Great. You should have seen my face when Rani and Esther were talking, because I felt they were speaking for us in a way. But that's a great work and a research. Kudos to the CGAP team. And for us in CAMFED, we support marginalized women in underdeserved communities in rural Africa. And so in the 6 countries we work in, Ghana, Malawi, Tanzania, Zambia, Zimbabwe, and Kenya, we support, again, the most marginalized girls to go to school, to thrive, and to lead change in their communities. And as you did say, in terms of the spectrum, currently for our CAMFED association members, and these are young women that we have supported over the period, we have about 78,000 of them in Ghana. And it's interesting to note that 60% of them are within the 15 to the 24 age bracket, and that puts them automatically in the dependent spectrum. And so clearly, as was presented, you would see some of the characteristics that were shared earlier. Generally, you'd say that they need more financial management from the basics. And so for us in CAMFED, we are supporting them with the what's, the how, and then the where. By what, we are giving them the financial literacy from the basics. And then by the where, we are teaching them or exposing them to best financial practices. And then by the how, income generation, because then again, we need to fuse these together to make them economically empowered. And so that's what we do in terms of the support and then their financial management. Thank you.
Thanks so much, Diana. And we'll move from Ghana to the Dominican Republic, Mercedes. Maybe you can also share a little bit what the focuses that you have on young women and where you see them on the kind of spectrum that Rani was presenting and what their financial management needs are.
Thank you. Thank you very much for the invitation and the presentation. Here in Banco Adopen, we have different programs impacting women's and young women's. What we do, micro lending, microfinance, and saving, have a big participation of young women, women's between 18 years old to 26, 28 years old. The 35% of the whole portfolio of Banco Adopen is in hands of those young women. The 40% of them are living in rural areas, and the 60% are living in urban area. Most of them that live in rural area are no close to cities, no close to universities, so has been difficult for them to get the opportunity to study or to develop a business. In the savings side, also we have the target that not only are those young people over 18 years old, we are also giving the opportunity since the beginning, very, very child, like 5, 6 years, they can open a saving account, and the product need to be very enthusiastic for them to promote the saving process of a child, and then to promote the entrepreneurs and it's a way to do it. So what we normally do is to have the target of women's, and from those women that we have in Banco Adopen, that is almost 70% of the whole portfolio, saving and credit portfolio and different banking products are young women. And the interest part is that actually we have 26% of the whole portfolio, but the new client that incoming for year 2024 is over 51 clients that have that ages. So 80% of them are single women, and from that 80%, 50% of them are single mothers. So we have 20% of them that are married and live with their couple. So that is another important aspect, and it's very important for us also that 10% of them don't have been going to any college, any university, any high school. But it's important to know that 47 of them of the whole portfolio already go to high school or finish high school. So one important aspect is to give opportunity not only to develop the micro business, also to develop ability in the university or in any technical classes that can support them to grow the business, to support the family, and to feel that they can be a great leader if they get the opportunity to take any training, to be monitoring or mentoring or supporting with any financial product. So that is in big way the target that we have for young women.
Excellent, Mercedes. I love the fact that you can recite those numbers. I think, you know, even the capacity of you as an organization to disintegrate all these numbers and get a good sense of the segments that you're serving is really important, and that was also reflected, I think, in what Rani was presenting. Maybe we can drill down a little bit more specifically in the kind of services that you are offering these young women. I mean, you mentioned that you're starting early with the children to get them on savings accounts. I see a couple of questions coming through the chat as well. Fantastic, by the way. Keep the chat alive and keep the questions coming. But I think there is some skepticism in terms of, you know, what a commercial provider like Adopen can actually offer in terms of financial services. So maybe you can say a little bit more about what some of the specific features are of services that you think meet the needs of these young women, and also whether there are other type of maybe financial or non-financial services that you are complementing this with in order to make sure that it actually benefits those young women.
Of course. Thank you for the question. The financial product that we have is especially designed for young women, for example, microcredit. You have to do the microcredit or the loans. It's important to feel the needs that they have to be fast, flexible, no guarantee, and the amount of the microcredit that you are giving to a young woman, you need to evaluate and to valorate, because if you give more money that women's need, maybe you are giving her a problem. So we have the program, and the program have a segmentation. The program of microcredit or micro loan, it has a segmentation from the basic that is beginning with 3,000 pesos, that is from $30, $50, so they can grow with the progress of the business, of the income that women has. So you need to be very clear in the amount that is a point and the requirement that you ask for a loan. So it has to be very easy, very fast, and the amount need to be the one that really she can pay, not maybe the one that she can need. So you have to be very close, supporting her, as giving some assistance in what to do with the money and follow up the disbursement after the disbursement of that loan. That is one big kind of product that we have, different stage of that product that support since the beginning to the biggest women's entrepreneurs. The second one is the saving account. As I said, we have like the children's saving account that need to open with a people that got more than 18 years, normally the mother, the father. And that also is very interesting because it's a product that need to keep the attention of the child and need also to keep the motivation of the child. So we have some kind of tools that we give to the child every time that they come to put the money in the saving account. And the saving account for the women's entrepreneur, our young women, get better interest rates. So also we have them the opportunity that if you are saving, we are paying a very competitive interest rate. That is a motivation, and also we support them that they can name a product. When you are saving for one reason. You are saving because you want to go to the university, you are saving because you want to get married, you are saving because you have to pay the school of your children. So you put a name, and we are supporting them to have that education for saving, and to put the product easy, and to put the product interesting for this special target. And another program that we have here in Banco Adopen is the financial education. It's a inclusion program that has workshop, training, business development, learning tools that we are very close to the women, to the young women, and don't need to be as a real financial service. Is that if you have an idea, if you have a business idea, we can go with you and we can support until you have the idea up to you have the business plan, and then you have to financial service with Banco Adopen. And also we have for the last 2 years a very important and interesting digital implementation and digital inclusion. That's mean that we have like a mobile banking that they can make any transaction in the mobile phone, and we also do the finance or the loan for the mobile, for the connectivity, and we give her the tools to learn how to use the facility, the mobile banking, the online transaction, and also special programs that they can learn by internet and by different community, that Comunidad Emprendedora Digital, that a platform also that they can make any transaction with other colleagues that can see how they are doing and learning and create a community of learning from this special program of networking opportunity. So it's very important to have a big range and a lot of knowledge and be close to the young women to understand the needs, and the needs that are moving every day, every moment is very fast. So you have to also be changing and adapting the program and the product that you have at the bank.
Excellent. And I can really hear in that range of activities that you presented that you accompany the young women. And as you said, their needs are changing on a almost constant basis. So being able to adapt and to offer what they need at different stages of their lives is really, really important. Diana, let's move back to Ghana. Comfort is a different type of organization. You're not primarily a financial service provider, such as ADOPEM in the Dominican Republic, but you do also serve these young women to meet their financial needs. So maybe you can share a little bit more about how you do that and what you think is critically important in that.
Very well. So I like what Rani had presented in her presentation. She did say that having the right financial inclusion strategy helps to determine the kind of support you'd give to each spectrum. And we have identified that for 60% of the young women we support, they are in the dependent spectrum. And clearly what they need is the financial management training or basic financial management. And so for us, we do use various guide programs. In Comfort, we have 4 different guide programs where young women that we have supported, that they are called Karma, volunteer their time to peer learn or support other younger ones with some sort of knowledge and skills that they have. And so these are in 2 phases. We have the in-school and then the out of school. For in-school, we have guides that would volunteer their time. They're called the learner guides, and they deliver modules to basic and secondary school. And interestingly, some of the modules that they deliver they have money and work, and they have developing financial skills. And so even at the basic level, we are teaching the younger ones to be financially included in what they do. And then when we take the out of school, we have the guides that we call the transition guides. What they do is to support our school leavers to properly transition and make better life choices. Again, it is important that financial literacy is included in the models that we teach them. And so they would be able to expose them to what are their typical needs and what are their wants, the best saving practices. And actually, Esther did say something about running away from loans because they feel it is scarce. What are some of the myths around savings? What are some of the myths around taking loans? And so we would go ahead to have loan clinics where we would actually educate the women on loans and demystify any misconception about loans. And then again, we have a 3rd leg of the guide program where we have the business guides. And so remember, we talked about the how, where we empower young women to have income generation. And so the business guides would help common members again to identify viable businesses that they can start, sustain with best financial practices. Then they eventually become economically empowered. In terms of the complementary support that we provide, and it's interesting that we really do align with what was in the research, because the research did say that for us to clearly give a complementary support to the dependent spectrum, we need to work with the gatekeepers. And for us as an organization, the ecosystem of our young women, all our clients is important. I'll give an example. If we are giving you an interest-free loan, we would need you to have your guarantor with you. Your guarantor could be your parent or your guardian or your spouse. And before they would sign on to the loans, they would get some basics, financial management practices or best practices that is important to support you to manage your loan. And so clearly you'd see that we are becoming financially included. The bubble is becoming bigger. It is going beyond just the young women that we are supporting. Their community or their ecosystem is getting to experience what we do. And I like what Mercedes talked about in terms of the financial support that they provide. It's specific towards the young women, making sure that they are not given too much money and they are given money that they would be able to repay. And so even for us to give you loans, there's a committee that is assessing your age, the viability of your businesses, your repayment structure. We are sitting with you and discussing how would you be able to pay this loan in, say, 8 months? What are the repayment strategies that you would need? What can we do for you to be able to help your business to grow? And so largely for us, in terms of the services, we are working at the basic level, giving all the financial literacy that they need to be able to be included in decisions. And then when they are out of school and generating income, the loans and all the various financial mentoring services we are giving them is helping them to become economically empowered. Yes, thank you.
Excellent. Thank you so much. It's such rich experience from both of you in different contexts. I see we have quite a lot of engagement in the chat with the questions and the answers that colleagues are giving. That's fantastic. Maybe I just want Diana and Mercedes to ask you a very brief, but literally 2-sentence answers before we can get to the Q&A on this kind of big question around, is it sustainable to offer financial services to young women, and for which young women it might be more so than for others? Can you maybe just from your own perspective give a very brief answer? Diana, I'll start with you and then I'll close with Mercedes, and then we go to the questions.
Okay, thank you. I think in brief, because we do not provide the service, we would continue to provide the inclusion activities. And so, yes, it is absolutely sustainable. When we talk about our guide program, we are looking at scaling up and reaching every member of the community. I think by 2029, we have plans to have over 15,000 guides, and they are tackling it from the basic level, the secondary level, to help everybody to be financially included. So yes, it's possible.
So it's a community model and you scale it up through your own participants. Excellent. Mercedes, from your perspective as a commercial player, is this financially sustainable?
It is. It's very sustainable. It's profitability. It's not only possible, it's important to build a better society and also to have impact in the community. And the women's and the young women's pay on time and do and create business and do many important things that we have to support, and we have to create the commitment of going on with them. So it's possible and is important.
Excellent. Well, that's a good way to sum it up. It's possible, it's feasible, and it's important. I know that there are several questions in the chat, so I'd like to ask Esther and Rani and Sophie maybe also to come back online. I don't think we can answer all the questions that came up, but Esther, there were 2 particular questions that were directed to you, so I'll start with that maybe. One question from Sasha is about the incentives or the business models that you have seen work best when it concerns financial service providers focusing on this young women. And I might take that up with another question that came through that wasn't specifically directed, but I think there was a question around, does TA for financial service providers actually help them to become better at serving young women? So maybe you can take these 2 questions at the same time.
Thanks, Antonique. So the first question, what models have I seen work best? I think most of the ones, just like Diana was alluding to, but in addition to that, the program, for example, that we have with BRAC, tend to show that programs that first encompass confidence building, that address I guess community-based, or let me call them agency types of programs, tend to have, if you will, better results because they first tackle the challenges at the young women's level, so at the individual level, and then move on to everything that's, you know, core financial inclusion. So I would say those are the ones where we see the strongest results out of our programs. And then the TA for financial institutions work. I would say yes. I mean, both within the work that I'm doing at the foundation, but even before that, I know that when financial institutions have been supported to understand the segment that they're catering to, it has helped. But it's not a one size fits all, and it's not a touch and go type of thing, right? It's something that you have to do consistently. What I find also, and Mercedes is here to speak for the financial institutions, I guess, but the business case is really important. What is the opportunity for these financial institutions to go there? While some will tell you it does cost, and yes, it does, but based on the return, you would find that that cost is probably very limited, right? Or lower than most would perceive. So yeah.
Yeah, excellent. And you've indeed pointed to Mercedes. Mercedes, maybe you can speak to this as well. I know that Banco Adopem did engage with some technical assistance a while back. And so maybe you can also speak from your experience of how helpful that was. And I'm sure you will support the fact that the business case is key.
That's true, is very important, and as being a bank is very important to formalize the women, to give the opportunity, not only like a financial inclusion, it's like a banking inclusion where they can get empowered. And as Esther said, it's not one size fits all. You need to know the needs of the community, of the young women, and you have to design the program that can be useful and monitoring, mentoring to have successful. But Adopem has been a bank that got very good indicators in quality of portfolio, in return rate, in ROA. So, and that's mean the philosophy of is important. The idea of what is the reason that the bank exists. And the reason is women, the young people, the vulnerable person that live in the Dominican Republic that do any productive work. We need to support, and we need to be with them, giving training, giving opportunity, giving platform to work, giving banking service. So
Absolutely. I'm conscious of time, but there's one more question that I want to get in, and I'm sorry we can't touch them all, but we've talked quite a bit about credit. The importance of savings was highlighted, including in the chat. But there's also a question on the role of insurance and whether this is something that young women are looking for, and whether this is something that should be provided. And I know that CGAP is working quite a bit on insurance, and we find it very important, especially to improve resilience of people overall. Sophie, I don't know if you want to comment briefly on the importance of insurance in the basket of financial services and also for young women.
Yes, I mean, in 1 minute, I can just acknowledge what you just said. If you think about the risk that a person faces throughout her life, insurance is one of the financial services that is extremely important. And in today's world, young women face a lot of risk, whether it is related to their family, to their economic situations, to their health, or to climate, increasingly, especially for those who work in rural areas and rely on harvest and so on for income generation. So insurance is very difficult to sell in general, probably to young women with little volatile cash flows even more, and yet it is fundamentally important. And therefore, we need to find solutions to bundle insurance with other services, possibly when it comes to climate, subsidize premiums, etc. But yes, we should try to make sure that they're not excluded from insurance.
Excellent. Thank you so much. And that gets us this time. This has been a really enriching conversation. I also really appreciate the chat. I would like to thank all the speakers, everyone who contributed and participated very, very much for this conversation. We know it takes an ecosystem approach to solve this, and public and private sector efforts need to come together. And I think we had a good reflection of that already on this conversation. So thank you so much, and we'll be continuing our work on this, and we hope to partner with all of you. Thank you so much.
Thank you.
Bye-bye.
Bye. Thank you so
Thank
much.
you. Bye-bye.
Bye.